Hey guys, what's happening? So in this week's video I'm going to be sharing with you a really cool stock picking strategy, one which I picked up way back in about 2007 2008 at a Rich Dad event. And it's something, well, when I say event, by the way, it cost me about £15,000 to actually attend these seminars, so we're not talking about some sort of Mickey Mouse free event. And this strategy has outperformed the Dow Jones for the last 40, 50, maybe even more years. Every single year outperforms. It's really awesome strategy. And if you want to know what it is, stick around. Okay, so we might have a bit of a problem this week. It turns out I'm not entirely sure where I've put the strategy. So I've had it for over 10 years now, ever since I was going to all these like Rich Dad seminars, like paying like £15,000. I thought the strategy was in with all these the books. Look at that, Rich Dad Guide to Real Estate Investing, awesome, and did pretty well for me despite the massive outlay of cash. But yeah, the strategy isn't here. I'm not sure where it is. I've just got to keep searching for it, and fingers crossed we're gonna find it. Otherwise, this video is gonna be ruined. It's not going well. I've been through pretty much all the drawers, the cupboards in the house. I know my wife hasn't chucked it out. She loves to keep just about everything. So I've just been through all of these boxes here in the corner. She doesn't like to throw anything out, so that's a good thing. I know I wouldn't have chucked it out. Another one of these. These are everywhere. Really good notes in there, but not what we're looking for. Oh, got it! Got it! Yes! Here we go. This is what we're looking for. This is the thing. Let's go and finish off this video. Alright guys, so get ready. We have everything that we need to do this strategy. No charts, no computer, anything like that. Just an old paper will do you just fine, because this is one of the most simple ways to pick some stocks using like fundamental analysis. It's super easy, so no technical weird stuff. And look around you, look where we are today. We're back here in Swansea in the Mumbles, and just such a lovely place with yet another castle just like last week. So this paper here, the Financial Times, is all that you're going to need, and no matter what country that you're in, I'm sure you've got some sort of similar paper. And we're just going to have a look through here at the financials, but it's a bit nippy out here, so let's head off and grab a coffee while we do that. Okay, let's get going. Okay, let's get started. So, what you're going to need is a couple of pens, and you'll be needing to mark off the ones with a PE ratio of more than 10. So at the top of each column you can see yield and P/E. P/E stands for price to earnings ratio. So quite obviously this means the price per share relative to the amount of earnings that you earn whenever the dividends are paid out for the share, how much you earn for actually holding the share. What you need to do next is take a look at the yield and go through each one, just marking off the ones with what looks to be a pretty high yield. So I generally look for ones yielding up and around the sort of 10% minimum. And once you've done all that, why not enjoy a nice bit of ice cream and a cup of coffee, or a nice latte like I've got here. Very yummy. Alright, so by now I'm guessing you might be thinking, what is all that about? Does it even work? How can I prove it? Well, this here is the Financial Times. This is what I was looking for this morning, and this is from 2011. And what I did back then was I marked out all of the stocks that I would have picked back then. And now today, in 2019, let's take a look and see just how well they've done compared to the Dow Jones. So in this spreadsheet, you can see that I've picked 12 different stocks back then in 2011. AT&T, Block, Chubb, Constellation, whatever that is, Public, SVC Travelers, Garmin and Seagate. So those were the only two that came out of the NASDAQ. All the rest, I believe, were from the Dow Jones or some sort of American shares. Anyway, moving on. So yeah, we said we invested 1,000 into each of those, which means we invested 12,000 altogether, and the profits today with today's prices is $27,785. All went rather well except for this Bauer egg here, which lost 852. And if compared to the Dow Jones over here, we're saying again that we've invested 12,000 into the Dow Jones back in January 2011. And today, in February 2019, we can see that we would have made 25,400. So not a massive difference, but this strategy has beat, in terms of ROI, the Dow Jones. This could all be more luck than judgment, okay? So I told you earlier I took these notes at a Rich Dad seminar, and I am not the best note taker when it comes to these seminars. I like to just sit and listen rather than take notes. I don't do those things simultaneously very well. So I think I took some very brief notes. There is a bit more to it than that. This strategy is known as the Graham and Dodd. I think it was the simple value trading system. Benjamin Graham, very, he's pretty much as big as Warren Buffett, okay? So let's take a look at that right now. Here we go, this is Amazon, and we can see value investing here, value investing again, from Graham to Buffett and beyond. This is the book Intelligent Investor by Benjamin Graham himself. There we got Benjamin Graham on value investing. So if you do want to know anything more about this value investing strategy, then there's tons and tons and tons of books out there that you can read. Or you could just Google it and just read PDFs like this. There's tons and tons online about value investing and the strategy itself. But after digging around myself, I did find there were a couple of extra steps which I could have taken for a better result. And what I've done here is I've gone over to the Financial Times and I've put in some of those things. So I want a market cap of at least 100 million to make sure that I'm buying some decent stocks. A current ratio of 2, price to earnings just the same as before. We want under 10 for the PE ratio, and then price to book of a maximum 1.5, and then the dividend yield is at least 3, because at the moment government bonds, which are like AAA rated bonds, currently paying out around sort of 1 or 2, maybe 2.4, 2.6%. So you really want to be going with shares because they're a lot more riskier than safe, secure government bonds, or at least government bonds are supposed to be safe, right? So you want to be earning more than you would if you invested in bonds, 100% definitely. So I'm searching here on America, so this is all USA stocks, and down here I've filtered it out through the dividend yield. So we got the highest dividend at the top here, which is Hexin Dye, which is yielding 14.55%. Obviously a lot better than leaving your cash in a bank. I don't know why people leave cash in a bank. I certainly wouldn't. What a waste of money. So yeah, let's take a look at Hexin Dye right now. We've got Hexin Dye Inc. Currently $2.87. and take a look over here at statistics. One of the things which I was reading about this Graham and Dodd strategy is, do you want to make sure that the actual cash that they're holding is more than the debt that the company has, or should I say, they've got assets which outweigh the liabilities. So if we scroll down here, this is on Yahoo Finance. You can search all your stocks on here. And this, by the way, guys, if you're into cryptocurrencies, is what actual fundamental analysis is, rather than technical analysis. I know a lot of people in crypto say that they do fundamental analysis, but there is, of course, no fundamentals in crypto to actually check. Cryptos don't have price to book, price to sales, PEG ratios, PE ratios. There's none of that because they're not securities and they don't actually generate any yield for anyone. They're not actual proper investments. So here we got all the way down here. You want to go down to the balance sheet, and in the balance sheet we have total debt, which is NA, which I like to think means that they don't have any debt. So that's good. That's what you want to find. And total cash is 53 million, so obviously they do have a lot of cash on hand, and as far as we know, no debt whatsoever. Very good yield, very low PE ratio, which is absolutely awesome. So Hexin die, pretty good, not bad at all. However, do you remember this here? This is the Bitcoin multiplier method. This is the book that I wrote after turning $500 into over 11 grand in about 3 months using cryptocurrencies. And in here, this is the strategy which was based on what I remembered of this particular strategy that I'm sharing with you right now, this Graham and Dodd strategy. But it's the way of multiplying your investment up very, very fast. Now, if you were only earning 15% per year, it's going to take you an awful long time to move $500 into like 10 or 11 grand. It's going to take a long time, right? But with cryptocurrency, you can move a lot faster. So if you want to download a copy of this book, all you need to do, there's a link down below to mutual.ninja/BMM. Just sign up on there. It's free to get involved with our site. And if you did want to upgrade to a master member, then you'll be getting one of these in the post, sent out to you wherever you are in the world. We'll ship anywhere, just give us a postal address. We'll ship it there. And you'll also be getting these two posters here, the periodic table of cryptocurrencies for 2018 and this year 2019 as well. But more of the point of what I'm talking about with the whole Graham and Dodd thing, having a diversified portfolio with Benjamin Graham, he would recommend at least 30 different securities to have there in your portfolio. Same as what we've got here with Mutual Ninja, with the Ninja portfolio for all of your crypto assets. You can put them all in there, keep track of them. You can see that we've got here both percentages up and down, and this one here called Alpha. So what it is we've got XRP. If I bought XRP there, yes, it's up 36% in terms of dollars, but Alpha means this is how much it's up compared to if I chose to buy Bitcoin instead of XRP. So that's how much I'm better off for having bought XRP rather than Bitcoin at that time. And there's a couple more things coming in here over the next few weeks as we bring out Satoshi's mines and more improvements on this site. If you want to know more about that, it's all in this book here called the Kerberos Investment Fund. It explains all about all of the tools that we have here in the masters area, the crypto signals, the whale fuel module, which is massively popular, and also the blockbuster crypto as well, which is tied into the posters. And we've got some master trading skills, BMM trading team, all of this stuff. I don't want to go into that right now and talk about all of those things because I've already done it in another video. If you are interested in finding out more about what we do here with Mutual Ninja, just watch this one here. This is Build Your Own $1 Million Crypto Portfolio, and that is all about using all of our tools. Everything's in there. There's a link down below in the description of this video. Just click that and go take a look for yourself. And that's it for this week, guys. Apologies for sort of hugging this microphone this week. For some reason it's not very sensitive, so I do have to get quite close to it. I'll probably try and get a new mic over the next couple of weeks because well, as you can see, it's not very convenient having to talk into it like this. Anyway, as I say, that's it. If you want to check more out, come along to our site. If you want to ask me any questions, all you need to do, scroll down to the bottom of our website. We've got some links to our social media channels, Facebook, Reddit. Best place to contact me is this one here. This is Telegram. Okay, just go to Telegram. If you're into cryptocurrencies and you're not on Telegram, you probably should be. You need to get on Telegram because all the crypto people, that's where they hang out, okay? And yeah, guys, that is it. That is it for this week. I hope you've enjoyed. Any questions, ask in the comments below. And I shall see you all again next week.